think China is lying.
This is a field of over 10,000 Neta V Chinese EV cars that are rotting away.
It's either going to be the biggest thing ever or a complete flop because of hackers get involved with this. And you get hackers in here, guys, and they're able to find a way to just cheat at the game. Today, folks, I'm going to share with you two investments that, because of these catalysts that I'm recognizing, have the capability to make you extraordinarily rich. This comes from the fact of a speculative standpoint. It's not a place where you're going to throw all your money, you dumb idiots. Don't be like Jeremy and just load all your money into, non-cash flowing assets and I'm keep your damn ETFs, keep cost averaging, duh. But I think these catalysts and what I've discovered here are going to be very profound if you play them the right way. But before we do that, we're going to review my $450,000 Canadian dividend stock portfolio. It's basically hitting all-time high. I'm sure everyone's portfolios are doing very well because, unlike a lot of these idiots on YouTube, I'm going to share with you the performance of these two main accounts that I do use and what I'm doing with these accounts in the future. So that's a conversation you'd appreciate. Hit that like button as always, folks, because I'm only bringing it to you more real than any other finance YouTuber that's out there. I don't bullshit you. I show the facts. We spit the truth. And taking a look, guys, we've got about $334,000 right now. The portfolio is about $1,000 off its all-time highs here. Well, it's recent highs since I kind of readjusted it at the beginning of 2022. But on top of that, we got to point out that I'm stacking cash, right? I'm still collecting good money for my job, and that's what's kind of taking the portfolio to this all-time high mark of around $450,000, sitting on about $115,000 in cash, also thanks to some recent dividends that we did get off VDY, obviously, for the last month. And I'm going to take a look at the individual accounts here because I just want to show you guys exactly what's going on, because I am going to continue to sell a lot of this off into cash, right? Like, this is probably the most cash I've ever sat on. I'm in a place where we want to buy a piece of real estate, get our lives together. So I am over time and probably going to continue to be liquidating this portfolio in a very cautious and cautious manner to take advantage of the rally if it continues to rally, because I don't want to just sell it all today and be like, I'm not going to trust the market. But every month I just take a little bit off, no rush, and then when we find the place we like, obviously I'll sell off what I need to do what I need to do. But even in this moment where I'm able to put all this in high interest savings accounts, I'm still going to be making close to $1,000 a month. I haven't been calculating the high interest income, but I mean, most of this, like, huge amount of money, like I think 80% of this is probably in high interest income right now, anywhere from 2 to 3%. I know it's not crazy. I could put it in other investments, but it's just in a savings account right now. I haven't adjusted it. But let's start off with a tax-free savings account here real quick. I mean, this thing is basically $1,400 off from being green since the readjustments. And you can take a look. I did pull some off the S&P here because it's rallied so aggressively. I think I pulled that off sometime, the beginning of this week. And the markets continue to rally since I sold it. But again, just trying to cautiously take advantage of this. VDY, I'm still down 7.2% on in this account. But again, I think it's prudent to point out that I've collected, over a year of dividends. So it's a 4% yield on this, even from the points that I bought. I mean, we're really not down that much, maybe 3%. We can see with SCHDVOO in this account doing very well. That's where all the gains are currently coming from. And it's still pretty equally weighted. I mean, all of these investments roughly have the exact same amount in it, especially if we converted the 40,000 US to CAD, would easily be closer to 60. So it's pretty much an equally weighted TFSA between these three investments right now. Taking a look at the performance here, again, something that I wish other YouTubers would show more often. In my TFSA, if we take a look at the broad view, since the day I started investing in this account as of June 7, 2017, 2023, the account is up 144% against the S&P that's only up 73% still, and the NASDAQ it's up 108%. So, I'm outperforming the NASDAQ almost by, a third here still. So this account has done exceptionally well since the history of my investing. So again, I like taking this into perspective on the long view. It kind of gives you some comfort in knowing the investments and the lack of volatility I'm experiencing. If I went in the Qs down at the bottoms, who could have predicted that? Maybe we'd be much higher right now. But again, I'm not a genius here, guys. I'm just doing what feels right for me, and it's going to feel different for you. This isn't a one-size-fits-all shoe investment style, right? And taking a look at my RRSP, this account, I'm only going to be able to pull about $35,000 out of it because that's all the government allows for using it tax-free for real estate, and then I have to pay it back over 15 years, which I think is a fair deal. Get tax-free income out of the RRSP. I have no problem paying that back over 15 years. If you're like me, you just want to invest aggressively. So, that's something I'll be taking advantage of here. And I'm only down 2% here on SCHD as of the month of June. And I think it's important to point out in the performance of these accounts, which we might as well take a look at with this RRSP, that the performance is based off May. So we got the May data in, but we don't have it coming into June. And June's been an interesting month where it's rallied a lot more. So these will obviously be a lot higher. The NASDAQ will be a lot higher. The S&P would be a bit higher. So do keep that in mind. This is just coming into the May performance. But we can see because of my really prudent investing, again, not being an idiot and, riding these things up and down like a wildfire, I took profit. This was where I made all that money in Tesla in 2019, rode that rally up, took profit all the way up, and here we are in May 2023 because I put most of it into these safe investments, and now all of it's right into SCHD. We're pretty much flat, and because SCHD's recovered, this will be up a lot more coming into June. But we can see because of that, I mean, we're outperforming the S&P in the same time frame by leaps and bounds, by like 5x or whatever, and the Nasdaq's up 58% in the same time frame. So 220% return is pretty nice, and especially if I pull it out and capitalize it into real estate. I think it solidifies some of the gains because then I don't have to care what the real estate value does, and I just got a place to live. It's kind of incredible. And again, not to lose the money. It's one thing to make money in highly speculative investments. It's another to keep it, right? I think that's one of the challenging things, and that's what you see in the speculative and these investors that just go crazy in the markets when things are hot, and then they get wrecked when it goes the other way, right? So let's kind of put this aside. We're not talking about my corporate account. Eventually what I'm going to do is I'm not selling off all my investments, but I am going to be adjusting what I have left once I make the calculations work. And in my corporate account, I'm only going to be using that as a patron member only account. And I'm going to talk more about corporate investing and share with you guys, because in there I think I'm only going to be buying individual stocks, and then I'm going to be basically reasserting my TFSA and RRSP, and all the money that goes in there moving forward will be index funds, and I'll keep my corporate account for more speculative and individual investments. But let's talk about these two catalysts with two different investments. One of them is going to be with Tesla here, and the other we're going to be talking about crypto. And I know crypto, why am I talking about crypto again? But bear with me because I wish other people were pointing this out a little bit more aggressively. But firstly with Tesla, forget the partnership with GM and Ford on the electric vehicle charging. Forget the future of robotics and AI, and trust me, I think that's going to be one of the biggest catalysts in the next 10 years. I was joking in my chat group, this thing is insanely overvalued. I don't know if it's going to pull back. I don't know if it's going to keep going higher, but what I do know is that this is an investment I'd like to hold and cost average into, even if it was at this value. Again, I don't have the money for it right now because of the real estate stuff, but if, just because for the raw fact that, if you're willing to hold this for 20 or 30 years, I think if everything that they're working on comes into fruition to some extent, it's going to be insanely valued. Like each one of their industries, everything from the self-charging stations to the robotics to the self-driving to the solar and the battery pack in homes. I mean, each one of those could be probably $100 billion business, right? Kind of just reminds me of Apple with just like AirPods. The AirPod business alone could probably sit on the S&P 500. I think that does $30 billion in something insane. I don't even know. Each one of those businesses is huge, and I think Tesla's moving in that right direction. But that's none of those reasons have anything to do with why I think you should be buying it. I think people have underestimated still how damn hard it is to actually do the EVs correctly, and I'm going to share with you something that blew my mind. BYD. This is one that, Charlie Munger just gloats about how much he hates Tesla, but how much he loved BYD and why he bought into this. And this thing has actually outperformed Tesla in the recent years. It's only down 22%. And even Tesla, after this wicked rally, since its all-time highs, only down, 36%. So, BYD has actually had some much more stable performance. But I think China is lying when it comes to the sales of this vehicle. Now, there's a channel I've been following for pretty much since I've been on YouTube for the last several years. And if you've never heard of this guy, I can't even pronounce his YouTube thing here, but it's Serpensa. And this guy, just listen to this because this is kind of mind blowing. And he only just posted this video.
This is a field of over 10,000 Neta V Chinese EV cars that are rotting away.
600多台啊，21年的，都是50公里以内啊，上牌新车。
And this man has just exclaimed that these BYD cars, all 2021 models, have less than 31 miles on them. Just like that field of 10,000 cars, they all have license plates on them, they're all fully registered, and they've been put away to rot. Yes, all of these cars have been left to rot. Why on earth is China throwing away entire fields of electric cars?
So let me put this into perspective. I really highly suggest you come and watch this video. It's very insightful, and it has a lot to do with ride sharing and just a lot of corrupt things that Chinese corporations do to try and make sales look better, just to keep the investment capital flowing in. And there were some similar relations to the bike sharing, programs they had in China, where there was just hundreds of thousands of bikes that ended up piling up. And I think BYD, there's just something going on here that this gentleman that lives in China, his wife's from China. I love this is why I always tell you guys, like, don't look at an investment other than from people, like, if you can't go and see it on the ground floor, it's hard to make an investment in it without actually knowing what's going on. And I love that this guy lives in China and he's been able to do this so successfully and point out some of these flaws, and considering he lives there, he understands some of the manipulations and corruption that goes on with Chinese businesses. And I wouldn't be surprised if, I really hope that BYD crashes on this. You should watch the whole video because I think they're actually more unsafe than even the likes of Teslas are. I think there's a lot of issues with these cars, and the stock hasn't started recognizing that yet. This video was only posted a day ago, and it's got 1.4 million views, and I don't know how BYD has not crashed on a video like that. If half the stuff that happened in this video happened in America, it would be splattered all over the news, and Tesla stock would be completely in the toilet. And I think this is another defining factor that how hard it is to do EVs just successfully. Now, I should also point out that I think Tesla's going to hit a brick wall here on earnings. I could be wrong, but when we're talking about this deal with GM and everything that we're talking about with robotics, none of this stuff makes money right now. And Tesla and Elon was even pointing out that they're kind of not in the best position for the recession, right? Because they've had to lower prices, they're losing margins. And if we continue to see that margin crunch, and we continue to see a bit of a slowdown because of how high credit is, and the problem with buying vehicles being the hardest thing to acquire in a recession, I wouldn't be surprised if some of stocks like Apple start seeing, hitting a brick wall, because this momentum is just getting a little bit out of hand, in my opinion, and it's becoming a little bit too much. I could be wrong, but who knows? We'll find out in time here. So the second investment is a lot more speculative in nature. They're both speculative in nature here. Tesla, I think you could pan out for the next 20 or 30 years. This kind of investment, I don't think is going to be a 20 or 30 year trade. It's something that you're going to have to pick up on when the moment comes into play. And you're just going to have to take it if you have the balls to stomach the speculation. And this comes down to the gaming crypto world. I can't get over that all these crypto guys, Andre Zick, all these guys pumping crypto to the moon, Graham Stephan, who's cost averaging into crypto and then doesn't say a word about it. Like, they're not talking about the real potential some of these things still have. Now, I haven't talked about it because I hate the scammers that go on in my comment section below, and I'm sure they're going to come up just making a video about this. But let me explain to you why there's something coming up that you should probably be paying attention to, especially if you're into gaming. I don't know if you know a guy named Dr. Disrespect, right? The one thing that we've been talking about that's going to be the real resilience to true infrastructure in gaming is going to be when they make NFTs and tradable drops within games. If you've played Fortnite, if you played any of these games, you get limited skin drops. People put tons of money into this stuff. Even me playing VR with some of the meta, games on my Oculus, those games have like in-game app purchase things you can buy for gun skins and all kinds of stuff you can put on your own body. You can't pull it out of the game though. You waste all that money. Once you put the game down, you lose it all forever. There's just no point in it. But Dr. Disrespect, one of these like iconic guys in the gaming world, has been working on a game for like 3 years now called Dead Drop. And I think we're getting to a point where this game is probably going to come out soon. It kind of takes place in a dystopian future where carbon emissions have taken over and they've had to build these mega structures that try and suck in some of the carbon emission. And you start at the bottom of the level with a bunch of other guys with proximity chat. You can talk to everyone. The bottom of the game freezes and you have to work your way up, the structure, and then you get to the top, and whoever's left at the top takes the elevator to the escape, where they get, with whatever the drops and whatever they got in the game, they get to keep as NFTs. And those NFTs are tradable in the real world. It's a very fascinating concept on a new world of gaming, and it's either going to be one of the most pivotal things to come out in a while. There's other games like Illuvium, but I think Dr. Disrespect has a bigger following. I think there's more behind it when it comes to like the gaming community. It's either going to be the biggest thing ever or a complete flop because if hackers get involved with this. And, you get hackers in here, guys, and they're able to find a way to just cheat at the game, steal the drops at the end, and leave, and then sell it all before you can ban them. It's going to be a huge issue. But I think this is really pivotal to the gaming world, because if this takes off, something like Fortnite did, or you get tens of millions of people playing it because it's a free-to-play game when it launches, and this game will make money off the transactions on OpenSea when it comes to the crypto and NFT side of it, because again, this kind of the artist side of it is you just make a little bit on all the transactions, which would be astounding. I mean, the top gaming cryptos are just going to explode because a lot of this is going to be based off some of these gaming infrastructure coins. And it's just something you want to pay attention to. I wouldn't buy into it yet. I'd wait to see if the game momentum starts to take off, and you're going to see so much speculation, and I think that's going to be the next bull run of the crypto market. I don't think it's going to be in any other industry because no one really cares about smart contracts right now. No one cares about any of that other crap, but people are going to care. Millions of people are going to care about gaming when they can actually imagine playing a game with other people where you're competing for like a $20,000 drop, something that's so hot in the game that like there's maybe only a handful of them, and you get it, and you're at the very end of the game fighting with these people, and you die and you lose a $20,000. The hype and the extreme level of it is going to be next level. I always suggest, you know, I like watching other YouTubers that I think have a really good feel on this. Alex Becker's talked about this a lot. He recently just made a video about it again, and he did a great job explaining this, and I highly suggest you go watch it if you're into that realm of speculation. Again, this is something that I'll take advantage of when it feels right to do so. But not right now, right? Whereas Tesla, I think you could do a longer term cost average into, let this stuff pan out. It's a lot more riskier at the valuation you're taking on. But again, these are just my personal opinions, and I'll pass that question off to you. I'd love to know what you think about all of this in that comment section below.